Good morning, everyone. Thank you for being here today for our ACA Reporting 101 webinar. We're going to get started here shortly, but just a few reminders as you're joining us. We will be recording this webinar and sending it out to you in the coming days, along with the slide deck and some additional resources. We'll also be posting it on the Morrison Garritano website for you to access at any time. If you have any questions during the presentation, please use that Q&A feature at the bottom of your screen, and we'll address those at the end of the webinar. We're just at 10:01, so I think we'll get started. I'm going to hand it over to Kristen White, our HR compliance consultant, to get us started.
Thanks, Sarah. So as Sarah mentioned, I am Kristen White, our Human Resources Compliance Consultant here at Morrison Garritano. I help our employee benefits clients with their compliance needs. So our first thing on the calendar each year, we have the ACA reporting. So we start with the big one. So thank you all for joining us. This webinar, again, is for our group specifically that have to do ACA reporting. It sounds like an obvious one, but I'll make sure you're in the right place. In a couple of slides, we'll touch more on that. So we do have, hot off the press, first time in quite a while, there's a couple new laws that just came into place. So we will touch on those, but there's not much change that I'd recommend you do this year. So really, there's not a fundamental change. So for our folks that have done this for a while, then this course is really a refresher. And those that are new here, you're definitely in the right place. We know it can be overwhelming. You're not alone. We've all been there before. So we're here to help. As Sarah mentioned, if you have general questions, you can certainly submit those throughout the webinar with that Q&A feature. However, for really company-specific questions, best for you to send those out separately. We can address them individually. All right. So we have our agenda here. The who, what, when, why is what we'll probably spend maybe the first half going over quickly. And then we're going to spend the second half just going over the how. How do we get those forms done? So before we jump in, I wanted to touch again that we know this reporting can seem onerous. There's lots of letters and numbers I'm going to throw at you. It can feel overwhelming, especially those first timers. But a couple points that hopefully should make you feel a little better. Most of us have a software system that handles these, your HR, your benefits, your payroll system. And since these forms haven't changed in quite a while, then those systems have had some time to catch up and get those perfected. And then really most of the data that's coming in these forms is what should already be in your system throughout the year. Think of it similar to a W-2. You file payroll all year. At the end of the year, all that data is combined together into one form. Same here. We're compiling all of that HR and benefits data that you should have maintained throughout the year. And then this is really the end of the year tax form to show what you did last year. So if you actually have a clean system, then there shouldn't be much you have to do manually with ACA. All right, I hinted a couple laws, and there's a lot of words on this page, but it's good you can come back to reference here. Again, I mentioned I really don't recommend you do anything differently this year. I know some of these can look like it'd be fun to jump into, but there's still a lot of nuances. Systems have not been able to catch up to this. State regulations have not changed yet. We're just looking at federal. IRS hasn't put any regulations yet, but I still want to mention them all. So the two new laws, I have my fun little laser pointer here. So our first one, Employer Reporting Improvement Act. The next one, that Paperwork Burden Reduction Act. So lots of fun words there. So this first one, we have 4 items. This is really mostly for our self-funded folks. So there's a section on the form where you have to list every covered individual. And for dependents, they're going to allow you to use date of birth instead of social. They did allow that somewhat before, but now they have less rules on how you can go about that. So a little bit easier there. The next one, electronic distribution of forms. This is great, but again, you still have to get consent from those individuals. So it's not just a blanket, you can only email to everybody. They have to actually consent. And again, your system may not have this option fully set up. So be careful with that. These next two are on our penalties. So that third one there talks about if you get a letter from the IRS. In the past, they had on the letter only a month to reply. Now you get 3 months. They were really flexible on this, so technically you're not going to see much change there. Hopefully you don't ever get a letter. But if you do, then now officially there's 3 months there. Statute of limitations. Previously, there was no statute. So they could go back all the way to 2014 to assign those penalties. So now there's a 6-year limit, but really that starts with this tax year. So they could still go back before, but this is one good place to start. And they're on about 2022, the IRS is at looking at penalties. Okay. Paperwork Burden Reduction Act. This is the one you may have heard of that seems like it'd be great to jump on. You certainly can. I will caution you, I still recommend that you do what you've done in the past, which is distribute the forms to everybody by March 3rd. A few reasons for that, but I will get into it. So what this law is telling us is you can hold those forms and only deliver upon request. So we're talking about that 1095-C form that goes each employee, each covered individual. However, you have to post a notice and you have to have those ready by January 31st. Pause there because that's a lot. We have a link here to the IRS site for B series forms. And we'll touch on what all those different forms mean. But IRS has allowed this for a while now on B series. So there's a small group that does those type of forms, and they've allowed this type of distribution in the past. So if you want to jump on this, I'd recommend going and looking at the details there of how to post the notice. Things like it needs to be on your website, include definitely all of the information the employee would need to contact you. There's a lot of details there. And this is where I would expect at some point the IRS to release guidelines on those specifics. So make sure we're being compliant, but that could be quite a while before we get there. This last bullet is the one that can be more challenging for some of us. They went back and used that original January 31st deadline. So that means if somebody requested a form early January, you have to get it to them by the end of January, where a lot of us like having that extra month to get those ready. So again, to use this, you'd have to have your forms ready early. I have a link here to the California Franchise Tax Board. This is really only needed for our self-funded folks, but there are still those few states that require the filing, and they require you to distribute the forms by January 31st. So mention that really nothing has changed on state. All right, that's a lot. Let's now actually get into what we plan to talk about. Okay, our first item on the agenda, who is required to file? So we have two main groups here, are self-funded. This is regardless of your company size, be a small employer, if you have a plan that's not fully insured. So level funded, balance funded, partially self-funded, all of those things are part of being self-funded. And so you're required to do filing. You're not required necessarily to offer coverage, but if you do, then you need to report who has the coverage. Okay, but the big one here, ALE, so applicable large employer. So this is, the IRS defines that as if you have 50 or more full-time equivalent employees the last calendar year. So we have a link here to a tool to help you determine that. That's good to check each year, especially if you're on that borderline. Blue box, important here for anyone in a aggregated group, controlled group. So you would have to combine all of your entities together. And if you have that 50 or more, then as a group, you're considered an ALE. And that means each individual entity then needs to file reporting, because what you put on the ACA forms needs to match what you have on the W-2s for your FEIN. Okay, that was the who. Now we get to the what. So what forms do we file? So there's two different types of forms. We have our 1094, 1095. I mentioned there are a lot of letters and numbers at you. Do not have to memorize these, but I'm going to throw out those throughout the webinar. So in 1094, this is considered an employer summary. It's kind of like a cover letter. And then 1095 are the individual forms. So think of like the individual W-2s to give to a person. This is like a tax form for their benefits. You'll see on the right here, there are B series and C series versions of each of those. So we have links out to the IRS forms if you want to go peruse those. The C series have a little more information. The B series are somewhat simplified, but the same type of data. Okay, in this chart, required forms. And this is a chart I still refer back to. It's helpful when I'm talking with clients here. I'm going to start at the bottom. Insurance provider. So these are carriers. So we're in this column for fully insured plans. So if you have a fully insured plan, your carrier is going to provide these forms out to the employees and do the filing. Now, fully insured, smaller employer, nothing for you to do. What the carrier does is sufficient. Where most of us fall is this top left here. My pointer's a little fun there. Our fully insured larger groups. So our ALE, again, 50 or more, fully insured plans, you do have to do those C series forms. So that means the employee in the IRS is going to get two sets of forms, one from the carrier and one from you. Okay, jump over to our self-funded and back at the bottom row for insurance provider. So the carrier does not do any type of ACA reporting for self-funded plan. So we're on our own, but we can do this. So going up a little here for our smaller employer, if you're self-funded, you are required to do forms. Again, it's a little bit the simplified version, but there's still reporting that's required. But if you're an ALE and self-funded, you're doing those C-series forms in all parts of that. Okay, that was a doozy. So that was the what. Now we're on to when do we do this? All right, so go up to the top here. This is distribution to your employees, to the covered individuals. This top row is the IRS deadline. They have that March 3rd. We mentioned the new law of the January 31st. If you are going to take advantage of only providing those upon request. But for most of us, I'd recommend sticking with this March 3rd deadline and getting those forms out to all the individuals. If you are in one of those states that has an individual mandate, and if you are self-funded, then you are required to get those forms out to those people by the end of January. And we'll touch on that a little more. Okay, so now we are down to forms to IRS. So they're going to want a copy of all of your individual forms plus what we call that cover letter. And you have till the end of March to do that. Now, most of our clients try to get everything done in January, if not by that March 3rd deadline. It's just simpler if you can just send everything out at once. But you really have till the end of March for that IRS submission. Now, we noted here you need to file electronically. The last couple of years, IRS has really cracked down on paper filing. In the beginning, I did paper for everything, but we have to switch over to electronic. So they only allow paper if you have under 10 tax forms. So tax forms are ACA, W-2. So I don't know if any of us can meet that, but if you can file paper, but they're due by the end of February. So really focus on here is March 3rd to individuals, March 31st to IRS. Okay, that was the when. I mentioned we touched back more on California. So why do they want filing? There is a federal mandate for individuals, meaning every resident is required to have coverage. However, the federal mandate removed their penalty. Technically, it's still there, but it's $0. So a handful of states, including California, chose to create their own mandate. So if you're residents of California, you are required to have coverage or you're going to pay a tax penalty. So that's why these states want to have the reporting. It's not to prove if you offered the right coverage. It's just for those individuals to have proof that they were covered. That's our why. So the what and the when. Again, same link we have here to the California Franchise Tax Board. January 31st, provide individual forms. They'll say right on their front of their page there's really no penalty if you don't meet that as an employer. You will get employees asking you for those, but technically you're not going to get charged a penalty if you don't send those. And then California has the same March 31st deadline as the IRS does to submit the data to the state. Who? I mentioned this is only for self-funded. So there really is a requirement to file for everybody, but for fully insured carriers, their reporting will be sufficient. But if you're self-funded, then that's on you to submit that to the state. Okay, that was California. Now, why do we do this? I know it's because IRS asks nicely and we want to do everything they say, but for most of us, really to avoid penalties. So we'll jump into it. First, I want to mention the employer mandate. So we talked about individual mandate, that's on the actual people. Now employer, so what are companies required to do? This is for what we said are applicable large employers. So if you have that 50 or more, and it looks like prior calendar year, regardless of when your plan year starts, we're looking at the calendar year. So you must offer coverage that has three things. So one that is affordable, minimum essential coverage, and minimum value. Those are three things the coverage needs to have, and you offer it to all of your full-time. So back up here, when we were looking at who is an ALE, you have to look at all of your employees, and you can use that calculator we offered to determine that. But then once you decide that, if you are an ALE, you only have to offer it to what the IRS considers full-time, which is 30 or more payable hours per week, and you have to offer the coverage to their dependent children. Okay. Jump into the two types of penalties. So the big one here, this is a penalty for not offering coverage. So again, we're still just talking about our ALEs. You're required to offer the coverage. We have two penalties. You can see there's all these more codes here, 4980H, there's an A and the B. You do not need to memorize those, but if you see those elsewhere, then you can remember, well, yeah, I'm here, and come back and look at this for reference. All right, so this first one, this is a failure to offer that minimum essential coverage to at least 95% of your employees and their children. Now, it's 95% or can't miss more than 5 people. It's like if you have under 100, then you have to offer it to everybody but 5. So if you have more than 5 people or more than 95% that you didn't offer it to, then we have the penalties, which are ones larger. So if you didn't offer it to enough people, and if any one person received that subsidized coverage in the marketplace, like a tax credit with Covered California, then we would go over here, and it's about $250 per month, but it's times all of our full-time employees. So even if just one person gets that subsidized coverage, we're going to get a penalty based on all of our full-time employees. So that can be a large one there. And we'll go through an example. Okay, our next penalty here is, I mentioned there's 3 different things. So minimum essential coverage is the top one. Here, looking at minimum value and affordable. So did the coverage have what it needs? And if any one person went to the marketplace. So this one, the specific dollar amount's a little higher here, almost $372, but it's only per employee. So it won't come out to quite as much. One little nice feature, if you do have this top penalty here, this first one, IRS usually won't charge you the second. So you only get one or the other there. The next type of penalty is just for filing. So you failure to file accurate and timely reporting. And this one, they usually do charge you both. So basically getting double penalty there. And some states like California do have a penalty also. Okay, we're going to do an example of that first big penalty. Again, a lot of words on this slide, but we'll run through it together. So this example, we have 75 full-time employees, and we failed to offer that minimum essential coverage to enough of them. And one of our employees received that tax credit and got coverage out in the exchange. So our formula, we take our total full-time. IRS does give us a little buffer. We get to take off 30 people, so that does help. And then the penalty rate for 24, we got the 250. So that can mean over 11,000 a month. So if we have that for all the months, then you have over 130,000 for the year. I don't mean this as a scare tactic. I know if you've taken the time to come here, you understand the importance, but it's helpful. I just want to make sure you know this is what could happen. And maybe there's someone else you need to show at your company to see why you're spending time doing ACA. I want to avoid these penalties. All right. So about halfway done there, we covered the who, what, when, why of ACA. Now we get to jump into the how. So how do we complete form? I mentioned there's two types of forms, what I consider an individual and a summary. This 1094 is our summary. The deadline comes after the individual form, but we do touch on this one first because it's a great place to start to check for errors. These are the types of data you're going to have for this form. A lot of it's sure to be in your system, but you just want to make sure you have this handy really before you jump in. You notice a couple here are specific to controlled groups. So make sure you're comfortable with knowing all of that data before you get into the forms. All right, our 1094 has 4 parts. We're here starting on part 1. I highlight all the fields that need to be populated. This first part is just your basic employer information. But I keep mentioning how these are somewhat in conjunction with your W-2s. So you want especially your name and your tax ID. Make sure those match what you're using on your W-2s. The bottom here, 18, is just the count of the forms. Your system should derive that. This 19, authoritative transmittal. So big words IRS throws in here. This is going to be yes for almost all of us. The only reason you put no is if for some reason you want to file multiple different reporting, maybe for different groups. But for most of us, we're just going to have the 1. Part 2, I mentioned earlier, they asked you for the count of the forms. They'd like to ask you that again. So we have that here. That should populate. We have 3 things circled here, and we're going to go over each one of those separately in a separate slide. So we'll just highlight here. 21, asking if you're part of that controlled group. 22 is a couple different options here. Certainly not required to check these. No red flag if you don't. But if you are able to, then it can simplify reporting somewhat. So you have both A and D. If you can select both, great. 1, great. Neither, that's fine also. Okay, so controlled groups. So if you are part of an aggregated group, then that needs to come into consideration with our reporting. So first, like I mentioned before, determine if you are an ALE. So if you're in a controlled group, you need to combine all of those employee counts together, determine if you are an ALE. And then if you are, each one needs to do their own reporting separately. Because again, the tax ID on these ACA forms needs to match what's on your W-2. Okay. Now back, we're talking about line 22. You have the 2 options there, qualifying offer of coverage. So both of these just give you somewhat of a reprieve on the reporting. So if you're able to check this one, then there's a couple fields that you can skip. What is required? So qualifying offer means you have to have offered that to at least 1 full-time employee for the entire calendar year. To offer them minimum essential coverage that met the minimum value, and offered at least minimum essential coverage to their spouse and children, and you can meet that federal poverty limit safe harbor affordability, which is about $100 maximum for the premium. So I could see some groups, maybe if what you charge employees is under $100, or maybe you cover 100% of the premium, then you might be able to elect this. So they're asking the 1094, if you have anybody that did this, then the system will start using that special coding for 14 on those individuals. Okay. So the next option that was back on line 22, 98% offer method. So again, it gives us a little bit of reprieve on reporting, and I'll mention that on our next slide. So if the coverage offered to at least 98% of your full-time employees. We said you have to at least 95. You can get up to 3% more, then they give you a little bit of reprieve there. That had to be certainly the minimum essential coverage, minimum value, and you offered at least minimum essential coverage to the children. You can use any one of the 3 safe harbors, which we will touch on. Okay, part 3. This is an important one. I want to make sure that you look at this more than once if you need to throughout your process. You can start with looking here and then make sure you come back and just double check this if you've made any edits before you submit. So the important one here that I'm really going to harp on is this column. So A, so did you offer at least that minimum essential coverage to at least the 95% for full-time employees for every month? So if you have any no's here, that's a big red flag. I mean, perhaps you didn't offer the coverage, and we don't want to falsify that. But if you feel you did and you have any no's here, then you want to go back and look at your data. So what's going to happen is later, the IRS, and they're a couple years behind, they're going to populate this last column on the right with anybody that got a subsidized coverage in the marketplace. So if you even have one person over here, then if that month is marked no, then there will be a penalty applied to that month. So we really want to make sure we don't have any no's in this column. This next one is asking how many full-time employees you have. If you're able to mark 98% on that previous one, you can leave this blank. And this is your total number of employees. And then if you're part of a controlled group. But again, really I'm focusing on this no, so make sure those are all yeses. All right. This is the last part of our 1094 form, more for our controlled group folks, and they're asking for the names and EIN of all the entities in that group. Okay, you made it through the first form. 1095C, this is what we're going to spend the rest of our time referring to. I mentioned there's a B series. That's really just a simplified version of this. So if you're comfortable with the C, then you should be able to handle the B series if you need to. All right, our 1095C has 3 parts. And we'll go through all of these, but there's just basic employee data. Part 2 is where we're going to spend most of our time. We'll get into that. Part 3 is only for our self-funded plans. Okay, so here we have the same type of data. The left, they're asking the employee information, the right, the company. All of this should automatically be populated in your system already, but you want to double check these. Part 2, this is where we're going to spend most of our time here. I will touch on the last change we've had is a few years ago, they added this employee age and zip code. It was only needed for our folks that offer individual coverage HRA, which I don't think anybody on this call does, but if you do, then you populate those. The rest of us can leave it blank. Top right, we have a plan start month. This is for your company, not specific to an individual employee. It gets a little confusing because some of the things on here are specific to employees, some are specific to your plan. So this one is for the plan start month. And we'll cover more of these, but this is where we're going to spend most of your time looking at these 3 rows. Okay, the last part, part 3, for our self-funded folks. So populate only 4 individuals covered on a self-funded plan. Include all covered individuals, the employee, spouse, dependent children, even non-employees, like those on COBRA, retirees. All of that needs to be reported. And you can check the box if they had coverage any day during that month. So again, this is not for the employer mandate to show you offered coverage. That was the previous section. This is for that individual mandate. So they want to use this to see which individuals were covered. So you put in their name. It asks for social, but we have a little bit of reprieve there. So if you have dependents or non-employees without the social, we don't know that, you can just do their date of birth. That's fine there. And then a checkbox for each month they were covered, just even one day is enough. Okay. We say that the 1095 codes tell a story. I'm trying to make it fun here. All right. So coding on the forms is designed to provide information to the IRS about the coverage that we offer to employees. So this is for that employer mandate. And then they can also use information for the individual mandate for the tax credits. Okay, the 3 different lines there, this is on that part 2. They tell us a story, like we said. So line 14 is saying, is the coverage that you offered, was that compliant? And then what is our lowest cost plan? So this is, I mentioned how some of that can be confusing. This is specific to the plan, not the employee. So regardless of what coverage the employee elected, they picked some platinum plan and covered the whole family, their premium obviously would be higher. This is asking what is the lowest cost employee only plan offered to that group of employees. Remember when I learned that several years back, then the light bulb went off and I said, oh, this makes this so much easier. So lowest cost plan, regardless of what the employee elected. All right, line 16, it's asking, did the employee enroll? So, and if they waived coverage, was it affordable? If they were not offered coverage, why not? So it'll make more sense as we get into it. Here, a lot of colors, codes on this slide. This is my favorite slide. I have it printed out on my desk. I keep it handy. I do not have these codes memorized. I do not expect you to, but it's certainly a helpful tool to come back to. All right, we talked about line 14 and 16. That's where we put in our different codes, and they need to go together. So it only makes sense to combine certain codes. This first one I have in purple here, qualifying offer of coverage. So I mentioned if you can elect that one, the 1A, then you can leave 15 and 16 blank. So that's why you don't see any other purple over in our 16 column. I'm going to jump down here to our green 1E. That means that you offer the minimum essential coverage with minimum value to employees, to children, spouse. And that's where you'll see most of us. And then there's 4 options you would pick over here in 16. Either they took coverage, and that's it. Or if they waived, then which of the 3 safe harbors can you file under? Okay. Next, if you did not offer coverage, then they want to know why not. So line 16 explains why not. That's one of our blue options here. I have a few in red because these would be red flags. So this first 2, B and D, they're saying you did not offer coverage to children, and that's required. So that's a red flag to IRS. Or this one says that you did not meet that minimum value. So ideally, you're not having any of these in red. If you do, then make sure that your information is accurate. So really, those bold and the colored are what I would expect for you to have on most of your forms. This is similar data, but just in a different format. So talking about combination. So over here on the left, we have our covered options. So you actually offered the coverage. If it's the Coverage is that offers qualified, like we mentioned earlier, there's different options there. Then you can do the 1A and leave the rest blank. A lot of us will fall under here. So if you offered that 1E, then you need to populate 15 with that premium amount, and then either they enrolled or there's safe harbor. I mentioned this down here, won't have too many here, maybe none on this call. If you're self-funded, we mentioned how you do need to do a form to show who was covered. But then if they were not an employee the entire year, then you would just use the 1G and the rest can be blank. Over on the right, if you did not offer coverage, 15 is blank, and then you put in the codes. So again, not expecting to memorize any of this, but it's a nice little cheat sheet to come back to. Okay, we talked about affordability safe harbors. So IRS gives us 3 different options to make our plans affordable. So affordable meaning this is the maximum monthly that you can charge employees. Again, not based on which plan they elected, but just the lowest cost employee only coverage tier you're offering to employees. Our first one, federal poverty level. This is the simplest calculation, but the most challenging to actually meet. Because this is simplest because it's not based on individual employee data. It's just based on that annual federal poverty limit that the IRS puts out each year. And then there's a rate that we have each year. So really, if your premiums do not exceed this 101, then you can use that federal poverty level safe harbor. If not, a most common is this rate of pay. So that you have to look at just the employee's base rate. So no tips, no commission, no bonus, no overtime, just their base rate. We have 130 here because that's the number of hours the IRS considers full-time when you're looking at this. So you want to get their base rate up to a monthly rate because your premiums are monthly, and then times this year's affordability factor. So my example here, I use the California minimum wage for last year. So assuming that you don't have anybody making less than this, that's full-time. And then so that 174 is the max you could charge. So if you have all your employees make more, then the premium could be higher. The last one here is not as commonly used, W-2. The challenge with this one is you're kind of hoping all year that you meet it. And then at the end of the year, you have to wait until your W-2s are done because this is looking at the 2024 W-2. The box 1 times our affordability factor and then get it down to monthly. So you can see the dollar amount. I just use an example here, saying somebody's box 1 is 40,000. This is how much you could do. These are just examples. These are used maybe for our groups that can't meet that federal poverty level safe harbor, but maybe they pay all in commission, so they're not gonna be able to use that rate of pay safe harbor. Do want to mention that all these rates I noticed here are based on the 2024 calendar year plans. Because you set your affordability back when you first set your plan. So you probably, if you have a plan that starts mid-year, let's say back when you set your plans that began in 23, IRS hadn't released these figures yet. So you were using the rates in place then, and you can continue to use that. So for any months that if you had a prior year plan to do that. So example, if your plan started in July of 23, then you can use the affordability rates that were back in 23 for those full 12 months, like all the way through middle of 24. And then for the second half of 24, you would have to use these new rates. Okay. That was all the information. Looking, we're less than 40 minutes, so we're doing good on time. Now we're just going to go through some practice. So I have some that the forms look good and some where they could use some help. For these examples, we're going to assume that we offered that minimum essential coverage, minimum value to everybody, employee, spouse, children. This company has a waiting period of first of the month after 2 months of employment. And then we're assuming that we're using the affordability rate of pay safe harbor. Okay, this is what I'm going to expect most of your forms to look at. Maybe even 95%, a huge amount. And then you're going to spend the rest of your time looking at the forms that don't look like this. So this example, this employee is eligible and enrolled all year. So 1E is telling us we offered them coverage all year. You can see we use this 12 months box. And again, this premium here. So this was the lowest cost plan that we offered to this employee. And then they enrolled, what our 2C code is. So simple. Again, this should all pull from your system. This is if the employee met that qualifying offer of coverage. We said you can use the code 1A and the rest can be blank. Now, there is some argument that if they did enroll, it's nice to put in the 2C code here. Not required, but can be helpful. This person was eligible all year. So you can see the first two look similar that we've had, but they didn't enroll until mid-year. So this first part is just showing, since they waived, it's showing our rate of pay safe harbor, and they must have had some type of QLE. And then so they enrolled in July, they enrolled the rest of the year. All right, this is a new hire, and then they enrolled. So these first quarter, we did not offer coverage for 1H. So then you would leave 15 blank because there was no premium because there was no offer. And then the first quarter, they were not employed. And then they were hired in April. So they have a waiting period. And then we get to the second half of the year. We offered the coverage. This was the premium, the lowest cost plan, and they enrolled. Similar, we have a new hire. This one started in July. And they were offered coverage for Q4, but they did not enroll. So here we have our safe harbor. Hopefully you don't have too many of these, but example to show you what it looks like if you have a hire and then a term or one or the other. We've used to seeing the hire. So this one hired in February, first offered coverage in May, and they took the coverage. This employer keeps them covered through the end of the month. So we have that here. And then for the last 2 months, they were not employed. Okay, this is similar to a hire, but that we have a person that was part-time and then switched to full-time. So they were not eligible the first part of the year. So this code in the bottom is saying they were not full-time. And then they were in a waiting period. And then they did take the coverage. Okay, this one, eligible and enrolled all year, but premium changed mid-year. So offered coverage all year, enrolled all year, but this change, we probably had a July start date with our year. So the premiums increased when that new plan started, but we're still the same affordability. So we just put in that new amount. Okay, our last clean form. So this is for our union group. So the person, we didn't offer them coverage all year because we paid into their union group. So you can use this, what they call it, a relief code there. That was our last clean one. Then we have a few examples with errors. So this one, they were not eligible the entire year. So really they should not have a form. So this is saying 1H we did not offer all year. And down here it's saying they were non-employee, they were in a waiting period, not an employee. Maybe it's that similar example. Maybe they were hired in May, and maybe they termed in July before their offer of coverage even started. So there's no need to offer them a form. That can just open you up to errors. So if you find any of these, make sure they're accurate, make sure they really weren't offered coverage. And then you can just delete the form if it's in your system. All right, this one, we talked about that qualifying offer of coverage. So if you have that code 1A, I've been 14, then 15 really should be blank. And this is also a red flag because that 150 is over our federal poverty level. So really, you should not be using 1A. So this is not a combination that would be acceptable. So you'd want to pause and see if really 1A is the right one, really is this dollar amount correct, and see what's going on there. All right. This is the most common reason for an issue. Something's wrong with your data before coming here. Something's missing in your HR, payroll, and admin system, whatever you use. So like here, this is saying the 1H, they did not offer coverage, and it's paired with being enrolled. So that doesn't make sense together. And then this, for that, those last 4 months, it's saying you offered coverage, but then you're telling them they're not employed. So those don't make sense together. So I referenced you to go back to those couple slides. I said there were cheat sheets. You'd look at what code combinations make sense. All right, this is our last one. There's a lot going on here that's wrong. But again, look for those code combinations that are allowed. Like this one's telling you we offered coverage, but they were not employed, or they're in a waiting period. And then this is that qualifying offer of coverage. Again, these codes don't make sense with that. So the only one really that makes sense here is our December. And that was all of our information. So reminder of takeaways, be aware of the IRS's intent to fully collect those penalties. So you want to make sure that your reporting is timely and accurate. Learn those codes, or at least have your cheat sheet handy, and then audit everything from the third parties. Those are great software systems out there, but there's some nuances that a lot of companies have, and the systems can't account for all of that. And then keep copies of everything for defense. So after filing, download those to your system, make sure those are easily accessible. We put in a few links here. This is that same link we had earlier. It really just goes out to our website to help you determine if you are an ALE. This is a link out to the IRS site, and this is to that California Franchise Tax Board. And that comes to the end of our slides. So again, if you have any general questions, you can put those in the Q&A feature. If you have anything specific, your company, I'd rather you reach out to me and we can talk about that separately. My email is a great place to start. I'm really the main person that answers this. Do you have some backups, but really you're just going to get me if you email here. And that's great because then I can look into your question and get back to you with the answers. Okay. Very good.
We have some questions for you, Kristen.
Oh, okay. Let's see what I can do.
We're going to start off kind of back at the beginning of the presentation. You mentioned who is required to file, and there was a note of companies with multiple business units connected through common ownership. This question is, does that refer to businesses within the US, or does it include global entities as well?
Ooh, I have not had that question. I'm going to have to do a takeaway there.
Okay.
I can kind of see both answers there, but I'll have to look into that one.
Okay. And just so all of our attendees know, if you submit your question with your name attached to it, we can follow up with you individually on all these situations. All right, the next one, referring to kind of the codes telling a story, and you said that the lowest cost for employee-only medical. Is that referring to the cost to the employee or the total cost of the plan?
Oh, okay, good question. Total cost to the employee. Let me jump over.
Oh, slide 28.
Go ahead.
Slide 28.
Oh, 28, okay. That helps. 28. Okay, line 15, lowest cost employee only. So not the total that you have to pay as a company to your carrier, but the lowest cost that you're charging to the employee. So the employee contribution, your lowest cost plan for that employee only tier. It's a lot of words there, but just the employee portion.
All right. This next question, I might have you follow up with them individually, but just to get it out there. They said they have a complicated benefits model where they have three types of employees: union, prevailing wage, and regular employees. How does this impact answering all of these questions?
Yeah. So it sounds like you have three separate classes, completely allowed. So each one would have different types of reporting. Like we mentioned, the codes you would use for the union folks. And then so each group can have different coding. But you still can put all of those in your forms. So even though like union, you're not offering coverage, you still want to include them in your reporting. You would just have different codes based on the situation for each of those classes.
All right. And again, I captured the name of that
Thank you.
attendee, so I'll have you follow up with them individually.
Great.
Okay, clarification. If you offer full health insurance for your employee, meaning that the employer pays the full monthly health insurance premium, would line 15 be 0? Side note, they do not pay for the dependents, just for the employee.
Yes, it's a good question. I didn't mention that. So you can probably do the federal poverty level limit. And yeah, then line 14 would just be blank because there is no dollar amount that you're charging.
All right, next one. Can we file with the IRS and California Franchise Tax Board directly from Employee Navigator? Which is forms.
Yes. So we're going to have another webinar on Thursday specific to Navigator, but Navigator does have the option, certainly for IRS and then for the states that require reporting, California being one of them. So yes, you do all of that through Navigator.
Perfect. And for those that would like to register for that webinar, I just posted the link in the chat for everyone. All right. Just a reminder that everybody will receive this deck as part of the recording. That was a question. What is required if you only have union employees?
So same, you're going to do the reporting, but again, you can use the codes specific to union. So it's that 1H, 1E coding. We had an example of that. Was that the zone? So 1H, 2E. Yeah, so you still need to report that you did not offer coverage, and then you can use this relief code. But Sarah, if you can track that name, we can follow up with them too.
Yep, absolutely.
Great.
All right, I think that wraps up all the questions.
Okay.
So thanks so much, Kristen.
Yes, thank you all for joining us. Again, the plug, if you are one of our Navigator clients, then we have the webinar on Thursday. And as Sarah said, everyone who registered will get a link to both the recording and the actual slides. Plus, we'll have those posted on our website. Especially those are new, I'd recommend going through this again, at least looking through those slides, and then reach out if you have any questions. So thank you all.